Good morning and welcome back to Margin. This morning we're going to talk about how much down payment is really necessary. So let's jump right into it. So once you have been pre-qualified for your new home, found said home, and negotiated said home, you will then be marching toward closing. Now, closing is when the actual transaction takes place. The warranty deed is signed over and you officially become the new owner of that property. So at this point, you and the seller will then act upon everything that has been agreed upon through the negotiation process. So if you negotiated a warranty, a new roof, or their pet ferret, you will then complete the purchase and make the proper exchanges accordingly at that point. So part of that exchange will be your down payment to the lender. Now, we looked at a high level view of mortgages, and each will have a minimum of 3% for a conventional loan, 3.5% for an FHA loan, or even 0% for a VA loan required at closing. But how do you know how much you should actually place as a down payment for that new home? So the first question you need to ask yourself is whether your mortgage has required mortgage insurance. Most do. So you will want to see what is necessary to remove mortgage insurance and when. So oftentimes you have to put down 20% in order to have the mortgage insurance waived, or depending on the loan, it can be removed once you hit a certain loan to value that you can provide via appraisal. The second question you will want to ask yourself is what payment you want to be at for your budget or your plan to spend. Now, this will help you determine what amount or portion of savings you will then want to apply to that down payment. This will be an easy calculation that your bank or lending institution can tell you. And I would ask for an if-then scenario. If you put a certain amount down, and based on that mortgage product that you actually choose, how much then will it affect your mortgage payment? So the third question you will want to ask is what else you may need to use that money for, whether it is a debt pay down, whether it is funding college savings, maybe it's investing, or some other aspect that you're aware of on the horizon that you may need to use a certain amount of your savings for. Now, you will then need to go back to what is being required of your bank or lending institution and make sure that these questions are actually factored in. So I found an article by NerdWallet discussing what down payment is required when purchasing a home. Some of this we have covered, but it's always helpful to solidify the approach and to really process through the aspects of the home buying process multiple times so that you're catching everything. So a down payment is the cash you pay up front to make a large purchase such as a car or home, and is expressed as a percentage of the price. Putting at least 20% down on a home will increase your chances of getting approved for a mortgage at a decent rate and will allow you to avoid mortgage insurance. But you can put down less than 20%. The minimum down payment required for a house varies depending on the type of mortgage you actually get. So down payment requirements can also vary by lender and the borrower's credit history. The minimum down payment for an FHA loan is just 3.5% with a credit score of 580 or higher, for example. But the minimum is 10% with a credit score of 500 to 579. So you can kind of see how this can change with just a slight change in your credit score. Saving money takes time, so a zero or low down payment requirement may speed up your ability to buy a home, but making a larger down payment has its advantages, which include a better mortgage interest rate, lower upfront and ongoing fees, as well as more equity in your home right off the bat. And beyond this, it also attributes to a lower monthly mortgage payment. To help you determine the right down payment amount, use a mortgage payment calculator to see how the down payment amount affects the monthly mortgage amount. So then set a budget and make sure you leave enough cash in hand for home maintenance and emergencies, as well as avoiding using all of your savings for a down payment. You'll need the cash after you buy a home, and you want to make sure it's there in the event that you actually do need it. So remember that every person's financial position will be different to some degree or another. So looking at your specific goals will be greatly important in determining how much you should be putting down on your home above and beyond what's actually required by your lender. So my call to action today is to gain clarity on the amount you need to place as a down payment that will ensure that you are achieving your goals, not only through the property that you're purchasing, but also from the standpoint of your personal finances otherwise. If this information is helpful to you, please do like, subscribe, and hit the notification bell so you're reminded to come back on a daily basis and improve in managing your personal finances. Thank you for your time. Enjoy your day, and we'll see you back here tomorrow.